you guys will have to bear with me for a little bit today. I'm like mismatching my favorite brands, like Bigger Pockets, my buddy Diego's shirt. But I'm out at the beach and I thought this was a pretty good setting to talk to you guys about multifamily syndications and really who those are absolutely best for. And I've been getting this question a little bit because for those of you who know, I was a general partner on a big apartment syndication. We bought a 146 unit apartment back in March, and I'm coming up on doing some other stuff. And just some of the people that are potential investors have been asking me, like, who is this right for? Is this right for me? How do I know if this is something for me? So I just wanted to touch base on that. And I mean, the long story short, like the bottom line up front is, if you don't have time and you have money, then being a passive investor in syndications is a great option. It really is. And that's the shortest possible way to sum it up. But let's say you're an officer in the military, maybe a pilot or somebody who is in the infantry, or you just have some kind of crazy work schedule, and so you don't know, like, you don't have time. You can't start building a business on the side. You can't begin investing in real estate full time. You can't do all these things, or maybe you just don't want to. But you have money. You get paid well. Maybe you get combat deployment. You have some tax exempt. Maybe you get flight pay or hazard pay or whatever the case may be. And so you have some money and you don't have time. Well, for me, if someone handed me $100,000 today, I would easily take 50, maybe all 100, and just stick it in a syndication deal with a friend, because, like, I like to do my own deals, but if it was just a gift, like if I just made $100,000 off nothing today, I would gladly put it in a deal with someone I trust, because I didn't anticipate that money, so I wasn't already looking for a deal for it, although you should always be looking for deals. But you stuff it into a syndication, and then 5, 6, 7 years down the road, you get it back 2, maybe close to 3 times back as much money, and you didn't do anything. You read the documents, maybe you checked an email every now and then as an update, you just collected a return on your investment in the mailbox every month or every quarter, and then it came back at the end when they sell the property or refinance you out, and you get this huge chunk of all your principal back that you've been earning interest on the whole time. And so the people that a syndication works best for are those who are limited time but want to invest in real estate, and they want the depreciation, they want the economies of scale of a big apartment deal. They want to be able to invest in these big deals, and they want to be able to do these big things, but they just don't have the time to do it themselves. And I'll tell you right now, having been a general partner on a big apartment complex, it's a lot of work. I don't know if I ever want to be like the main person on a syndication. I'm kind of content being one of the people involved and not having to do everything. It's stressful. You got to deal with SEC attorneys. You got to deal with a lot of different stuff like that. And it's taxing. I just don't know if it's something that I would want to be involved in all the time. And so, real quick, just to sum up some of this, the two people who can invest in large deals like this are accredited investors and sophisticated. And I've talked about this before, but an accredited investor is someone who either has, they make $200,000 a year, or they're married, they make $300,000 a year, or their net worth is $1 million. And a sophisticated investor is somebody who can be reasonably assumed that they know what they're doing enough that they understand the risk they're taking on with a big deal. And so this could be someone who has bought a lot of real estate on their own. Maybe it's an attorney who deals with real estate. Maybe it's a commercial broker for real estate. Who knows exactly who it is, but it's somebody who understands real estate enough that it could be assumed they are understanding of the risk that they could potentially be getting into. And so those are the two, accredited and sophisticated. So you might fit into one box, you might fit into both boxes. Those people can invest in apartments. If you're neither of those, like you don't really know what you're doing, you don't really have any money, focus on learning what you're doing and focus on building relationships with investors, and then you can get into these deals. But I wouldn't necessarily say it's the best option for you if you can't afford the risk, right? Never take on a risk that you can't afford. And so that's just a long and short of who can invest in these deals. But determining if it's right for you, the best thing that I can say is, as I've repeated a few times in this, is just get with people that know what they're doing, right? Find a team that knows what they're doing. For example, the people that I partnered up with on this last deal and will in the future, they have over $100 million worth of assets under management. They've syndicated over 1,600 units on their own, and they have a great track record. So they know what they're doing when they're buying apartments. So having trust in the people you're investing with and knowing their team is the absolute most important part in all of this, right? And yet, you also got to know the deal. So you want to be able to look through, make sure you run through the deal, understand how some of that stuff works. So there's preferred return, which means that the investors get X% return before the people running the deal get any money. There's you got to understand how the split works. You might get some deals have a much higher preferred return, and you might get a larger interest rate, but you get a lot smaller portion of the equity on the back end. And that could work depending on the deal structure and your preference. I personally would rather postpone some of the interest and get a much bigger piece of the equity on the back end if I trust the team to actually be able to take on and do what they say they're going to do, right? So if you trust the team to actually be able to accomplish what they want to do, then you're going to get a lot of equity back with the value add over time. And so there's appreciation plays, there's cash flow plays. It all kind of depends on you as an investor. Make sure you do your due diligence on the team that's managing the property. That is the most important team. A great team will make not any deal, but will make deals work. And a really bad team can take a great deal and screw it up. It happens. I've seen it. It's just, in fact, like, take my bad flip, for example. I had a bad contractor, and he totally screwed up the whole flip and cost me tens of thousands of dollars, right? But if you're with a good team, you don't have to worry about a lot of that crap. So just understand the people that are involved in the deal. Do your due diligence on them and their track record. A buddy who's investing with me here not very recently went and literally drove to an apartment complex that they owned. It wasn't the same one, but it was another property they owned, because how you do anything is how you do everything, which I love that quote. And I thought that was very smart of him. He drove like 45 minutes just to see a property that they managed, and that was something he felt very warm and fuzzy or good after doing that. And so he decided to invest in the deal. But I thought that was really smart. Like, I was telling him, I was like, dude, this is the coolest thing I've ever heard of an investor doing to vet team. And I thought that was great. So just find a way to figure out if you know what they do, what their track record is, and if that's something you want to be a part of, because that's very important. And then again, like, this could be a great opportunity for you, because it really is one of the most passive ways you can invest in real estate. I mean, think about it. You get an email that comes to you with an opportunity. Someone's already done all the work on drafting that up. You review the investor information and all the deal and all the ins and outs. And then you say yes or no. And if you say no, you wait for the next email to come in your inbox. And if you say yes, you fill out a few forms, wire some money over, and then you sit back and you just relax and allow your money to come in, right? I mean, what better way to invest is there on a passive front? I mean, yeah, of course you got to do a little bit of work. And obviously you got to do work to earn the money, but that's passive. And then if you're with a good team, let's say 5 years down the road, you get your money back, and let's say it doubled, which honestly some of these returns are better than that. The one we just closed is projected to much more than double over the 7 years we're holding it. A really good return. But let's say it just doubled. And so you put $50,000 in, now you have $100,000. And let's say you do that again. Let's say you did it the second time, and now that $100,000 is $200,000. If you did that 4 times, let's say they were all 5-year holds, and you did that 4 times over a 20-year career in the military, or a 30-year career of the military, or whatever, and it was just an initial $50,000, do the math here. 50 becomes 100, that's the first time. 100 becomes 200, that's the second time. 200 becomes 400, that's the third time. 400 becomes $800,000 the second time. Now, yeah, there's some gains involved, and there might be some tax involved, but that's pretty incredible, right? And those returns are possible in other places, but that's just so passive. And you're getting tax benefits of depreciation, and you're getting equity build, and you're getting it's kind of recession resistant depending on your market, because people like apartments, and they usually migrate to apartments when they move out of houses. And you get inflation resistant, because as properties go up in value, so does the place you live in. So if the dollar goes down in value by 3%, then your apartment probably went up in value in 3%, because that's how it works, but your debt is the same. So there's just so many different benefits to real estate, and I could go on and on and on. I'm going to make a video about what syndications are and what you need to look for, but the long and short of it up front is just understand if it's something that's right for you. And if you have questions about it, I'll put a link down below to my investor portal. Go in there, fill it out, we'll schedule a phone call, we'll talk for 15 minutes. I can clear up some of your questions. I can help you decide if this is what's right for you. And if you want to get on my list for these opportunities, let me know. I'll throw you on the email list, but we got to have some kind of a conversation or know each other to be on that list, because I can't just be sending these deals out to everyone. I've got to actually have a relationship with those people. So, you know, sorry. It means that you have to involve yourself in my life a little bit and have a phone call with me for a little bit to hear about your goals and see how we can best help each other out. But, you know, if that sounds good to you and you want to jump on a call or pick my brain about if these are right for you and you have some money to invest, let me know. Or even if you don't have money to invest and you might down the road, or, you know, whatever. It's not just going to be syndications that I push out. Maybe there's opportunities for some lending. You know, I don't know. What I do know is that I want to build my business, and I want people like you to come along for the ride and build your wealth as well. And I think that that's a win-win-win situation. I love it. I think you'll love it, and I look forward to hearing from you. If you have questions, throw them in the comments. If you got something out of this, let me know. Hit the like button, and please make sure you subscribe to the channel. The more people we have subscribed to the YouTube channel, the better it is for the entire community. So I really appreciate you hitting that subscribe button and that thumbs up. And have a great day. I'm going to get back to reading my book at the beach.